Time now for Phil's Gang Market Watch with Phil Grande.
Good afternoon. My name is Phil Grande of philsgang.com radio show, a nationally syndicated show around the country. I'd like to share with you what I share with my audience today. I've never seen so much lying going on with the Federal Reserve with Yellen. She doesn't look like a yeller, liar, but she is. And she looks like a grandmother that you don't want to trust. And she is just a dishonest woman. And let's start with one of the cuts where she's very, very dishonest.
Quantitative easing, do you believe that unintended consequences of QE 1, 2, and 3 may be with all the bond buying that it's forcing people into the stock markets, creating this bubble?
Well, I think an environment of low interest rates in general, which have been promoted by our both our keeping the federal funds rate at zero and additionally by our purchases, low rates do have an incentive to push individuals to look for yield, to reach for yield.
Oh, if I were the congressman, I would say speed it up. So are you saying that it's making a fake market? Say it, yes or no. I mean, she just goes on, and the congressman is just as dumb because he doesn't go in and say, wait, stop this. I want to know, by doing quantitative easing, by pressuring the 10-year Treasury bond to go down in yield, is the purpose of that to help the economy, to help the middle class, the working guy, or is this all about taking and putting such a surge in the stock market where only the wealthy and the banks gain, but the middle class doesn't? And at some point, there's going to be so much inflation that inflation is going to hit, and then always followed by the high interest rates is what caused the crash, of course, in the dot-com, caused the crash in the housing con, and is it going to cause the crash in the QE con? I just want to know that. Yes or no? He didn't do that, did he? Because he doesn't want to know the truth. Because the truth is this. The truth is that when you keep on forcing these rates down, it moves the market up. And what she's doing is she says, well, when the economy gets back to normal, I'm going to still be very accommodative, which means when the economy gets back to normal, she said today, she's going to keep interest rates at zero. Well, why would you keep interest rates at zero if the market's back to normal? Because she knows she's a fraud. She knows the jobs are fake. 275,000 jobs, they're part-time. They're fake. There's no value to them. If we woke up tomorrow morning and poof, they're gone, there's no human value to those stocks. We would never miss those jobs. There's nothing of value. They don't produce anything. They're just fake. So the jobs are fake. The stock market's fake because it's the low forcing those interest rates down that pushes the stock up. The stock prices are fake, like the S&P 500. She says, "Oh, I think they're not overpriced at all." What do you mean not overpriced? Of course it's overpriced. The S&P 500 the P/E ratio should be at 10, but it's at 17. That means the stock is selling almost $198. The S&P, if you go buy one spider today, but it's only worth about, a quick calculation, $129. But listen to what she says. This is unbelievable. This just drives me absolutely nuts.
Would you ever see the restarting of quantitative easing? In other words, once it ends, do you believe that this is now the new normal, the federal government buys these bonds? Or would you commit to saying that quantitative easing has come and gone and we've seen the last of it?
Well, it really depends on what the economy does. The economic outlook is very uncertain. I hope we're on a solid course of recovery and that it will continue and not encounter some serious setback. I wouldn't take it off the table forever as a tool the Federal Reserve might need to someday in some circumstances use again. But my hope is we're on a path of recovery and monetary policy will over time normalize. that our purchases will end. Eventually, our balance sheet will begin to shrink back toward more normal size.
Oh my God, my hair's hurting. What she should say if she was honest, yeah, I'm going to have to go back to quantitative easing because we're not creating the jobs we need, and therefore, if we want to keep these interest rates low, I got to go back and do it. And if I don't, and these interest rates go up, we're going to have one hell of a stock market crash. Then she lies, and she talks about, and they're talking about the banks. Listen what she says about the banks.
We have finalized our Basel III capital requirements that significantly increase the quality and quantity of capital in the banking system. Even before we did that through our stress tests, we have worked to ensure that especially the largest and most systemic institutions have the ability to not only survive a very adverse stress to the system.
Oh, shut up. First of all, she's lying again. The stress test that she mentions, it's a fake stress test. The most important assumption should have been in a stress test. What happens to these banks that have $100 trillion, JP Morgan alone, in derivatives that they took and they moved in to the balance sheet of Bernanke's balance sheet, and then moved into the Treasury? They still owe that $100 trillion, and what is going to happen when all of this stuff comes due? The banks are weaker now than they ever were. In fact, you never fixed them. Am I right, Yellen? That's what she should have said. You never fixed them since 2008. What have you done to fix them? In fact, the banks right now are weaker than ever, bigger than ever, and more crooked than ever. And you've done nothing to fix them. It was all fake. It was just to make the rich richer. It was it. See, this is what she should be saying, but she's not. So what does this all come down to? It comes down to this, very simple. That the banks are weak, the banks are fake, the jobs are fake, the stock market, where it is today, is all fake. It means we don't have a stock market. What we do have is an opportunity to take some good stocks that we can find, not buy and hold them because they're too expensive, run them for 2 days to 2 weeks, maybe a month, that's it. Stay in a short time frame, and you can make some good money. That's all you can do right now. For you people who buy and hold, or for you people who are in stocks long term, cash out. Go to cash right now. Go to cash. Okay? Unless you want to do some trading in short period, go to cash starting today. So that's my message to you. She's a total fraud, and she's just a pompous arse.
For more information on Phil's Gang, please go to philsgang.com or give him a call at 877-600-GANG. That's 877-600-4264.